I mean, let's put it in perspective. We are still, if you look at the S&Ps, we lost 1.5% here this morning, coupled with Friday's loss. So you're sitting around 2.5 to 3% off the highs. Nothing to get that nervous about. But then you start reading about this thing. And I wasn't that nervous on Friday. If we were talking, I was like, they probably buy it back. I kind of shrug it off. But as you're reading more on the weekend here, you're like, this isn't good. I mean, this virus is not good. I mean, there's been people that have been saying, it's not as bad as SARS or not as bad as Ebola. But then I'm reading other things that's saying it's worse because it's more contagious. Yes, the death rate is slightly lower, but at the current rates, the reproductive rates on this thing, that this thing could be global in a couple of months. So it sounds scary. The World Health Organization is saying it's not a full-fledged emergency here yet, but it's still very, very scary. And the situation is very scary. And I've been nervous for a few days. If you've been listening to the show, I lightened up my portfolio in the last 2 days. I sold a number of stocks out of my long-term portfolio. And I also bought puts on the SPY. I also bought puts on some airlines. So just playing the bounce. I mean, fading that bounce, classic fade of the bounce. I sold my iRobot yesterday in the 54 handle. I sold Etsy. I sold my Twitter. I sold my Kohl's. I sold a number of stocks out of the long-term portfolio. I have the most cash I've had probably in a decade in my portfolio here right now.
Take out the coronavirus as a catalyst, right? I mean, I like to look at that from that perspective. I mean, even before that happening, you look at the gains from 2019, tacked them on in 2020. Very extraordinary market coming into an election year. Also, I mean, usually the market performs pretty well in an election here, but I think you got a lot of circumstances going on here, besides this coronavirus, and the expectations for the market just to keep going up and up and up and up and up is just not a realistic expectation. It's good for the market to back and fill. It's good for the market to come in a little bit, consolidate and grab some momentum. Unfortunately, it's, instigating this. That's a horrible thing. So You can look at it from a lot of different angles here.
Nice rally here this morning. Obviously, we had the ugly day on Friday where the market finally started to get some sense into it. I've been challenging the market all week and not understanding why it won't go down with the potential contagion here. And I don't know if it's a contagion, but what do they call it? Pandemic, potentially? But the potential pandemic, we'll call it. I have not understood at all why the market continues to be so resilient. It's resilient again here this morning. I still think, like I was saying before, I'm not buying dips. I'm selling rips. I sold more Friday morning before we started dipping. I actually sold S&P SPY out of my long-term portfolio, which I've never done before. And I also sold something else too. I sold Manulife, which is Canadian. I was like, nah, I'm not owning that one either. So just lightening up the portfolio. I'm actually at a portion now where my portfolio is probably as much cash as I've had since the financial crisis. So but we'll see. I'm making a call that I think we're only early innings. This is my analogy, and I think this is how the markets are going to trade going forward. We've got a lot of bad news last night. A cruise ship gets quarantined in Japan, 10 people aboard. Deaths toll obviously increasing, the numbers not great. S&P futures trade down. Overnight, what happens? Rumors of a vaccine. Vaccine rumors trump all. And here is the issue that I have for my short thesis, is that Russia, and everybody has been saying, we're 6 months to 12 months away from a vaccine. But if we're going to rally 30 handles every single time we get rumors of a vaccine, we're going to probably get rumors of a vaccine in the next 6 months. We're probably going to get them 3 times a week. So if we're going to rally 30 handles every single time we get a vaccine, how can you be short? Because that's going to trump all. The rumors of the vaccine are going to trump all. And when you're talking 800 million people under quarantine and the market's making new all-time highs, it's the most irrational market I've ever seen in my life. It is not trading on logic. It is not trading on fear. The only fear it trades on is the fear of missing out. But, I've been trying to play the short side on this market a few times, and I've been burned. So off with the coronavirus. And I'm like, okay, well, I'll buy my puts on my long-term portfolio. I'm going to play it long. That the play almost is like, the insurance is so bloody cheap. When it's down there looking out, I was almost wondering if the play isn't just to buy a whole pile of SPY and hedge it all with puts going out 5 months. And, if this turns into nothing, the SPY is probably going to rip a lot more than 3%. If it turns into something, well, you lose 3%. So, and if you really turn it into something, then the play is just to buy it flat out put. So, but the options I just think are not pricing in any of this.
Welcome back, Triple D.
What's going on?
Not much. How you doing, man?
I'm doing good.
Yeah? How was the vacation?
It was interesting. Anyway, so I gotta take my mask off here. I'm okay now.
You sound better. Okay, good.
Yeah. So
I was just kidding with you guys. Just kidding. I haven't wore the mask. I have not wore the mask, but I do have them. 3M, like 3M, I do have them, but no, I haven't wore it. So I don't think we're at that. I don't think we're there yet that I need to wear the mask on the radio show. So I'll take it off for the radio show. It was good. So you know what, though? That has got to be the most expensive vacation I've ever taken in my life.
Oh my God.
I missed the best week of trading in a decade. What's up? Wow. I thought it could get ugly, and I actually was prepared, obviously. You know, we had talked about this for a while. So I had my SPY puts, and okay, so back up. We've had this vacation book. We went to Jamaica. Me, my wife, kids, friends of the family, their kids, had this vacation booked for the last 3 months. Everybody is pumped for it. I thought about canceling this vacation nonstop for the last week and a half, like just bailing on it. But I was like, everybody wants to go. I don't want to be the person. When I left last Friday, the markets were literally 2% off the all-time highs. So I'm like, you know what? I'm scared, but I think we're ahead of it. I think this could be an ugly week for the markets, but I'm not going to cancel my vacation because of, a potential opportunity cost. Anyways, it turns out I obviously should have maybe canceled the vacation because the market rolls over 3,000 points when I'm away. So a lot of opportunity cost on that vacation there. But regardless, I had a good time. The kids had a great time. We enjoyed ourselves. The resort was fairly empty, to be honest with you. It was about, they said it holds 1,500 and we were at 900 people. So it wasn't too full. It was a beautiful resort. Kids swam every day. I was in the lazy river relaxing while the markets were falling thousands of points. So it was very, very, very interesting to take a week off, but I was checking constantly. I couldn't stop myself.
Now, what we want to do is automatically go, oh my gosh, this is my shot. I've got to participate. The moves are so big. But step back a minute and say, wait a second. What is the risk of engaging incorrectly when you've got massive moves and you do not have the feel that Dennis is talking about? You're going to lose a lot of money. So you have two choices. You can step back and watch. For me, I trade to eat. So the market is a buffet every day. And I cannot eat an elephant in one sitting. I'm going to have one plate. And so you can go in and every day take a small chunk out of the market. And if you have that approach, you will develop consistent motion. If you go in and say, here, I'm ready to bag my elephant, and you don't have the skill, the mental fortitude, or the capital to manage the kinds of rocket moves that could come, you are going to blow your account out. And there's nothing wrong with watching. So as a trader, you have to say, wait, what's my skill level? Be honest with yourself. Do I have a low skill level? Step back and say, you know what? I'm going to use this to understand how market motion can whipsaw, and then take the biggest time frames you can see and look for monthly lows and monthly closes and see where we are relative to those. And then if you want to get next to something, get next to a monthly close and then go deep in the money and buy yourself a call, or go really small with your size and engage. And when you see it coming to resistance, folks, get out.
Bottom line is, we aren't going to have any sustainable rally. We're not going to rip up to 280 or 300 on the SPY until we get a cure or a vaccine. That's going to be the difference. And if we can get that, I will start buying stocks in my long-term portfolio. Until they show me something that really, really works, I'm going to stay with 80% cash in my long-term portfolio because the economy is suffering significantly because of this. But it has to. It's short-term pain for the long-term gain of saving lives.
But right now, it looks like the bad news has been priced in. This has been a bear market, as a good friend Jim Paulson has said. This was like a hypersonic bear market that played out very, very quickly. And a lot of that got priced in extremely quickly. And right now, I look at all my breadth measures, all my gauges, all my sentiment things, and they got washed out to zero. And guys, I've only seen that happen now 5 times since the 1960s. This is the 5th. And when I get readings this low and I look out going forward, I find that the market on average is higher 13% 26 weeks later. So again, sentiment with the put-call ratio. I look at the AAII numbers. I will look at those short-term gauges and sentiment, and they really look like they were fairly well washed out. And now, again, from the conversations I'm having with managers, they're starting to fear that they're missing out.
I can tell you the factors, but what I do think is the market will hit all-time highs again this year. I think that the liquidity is crazy. I think this thing is going to get solved. I think it'll be later in the year. And I think if Joe Biden takes the presidency in November and this thing gets cured, 2021 looks amazing.
I want stocks that make no sense. I want stocks that go up all the time, don't have any footing in reality at all, like Tesla and space and VTIQ, baby. Come on, they're revolutionizing the trucking world.
Wait, what's that one? I don't know that one. What's that one? Give us
VTIQ? Oh, get in right now. Hurry.
Hurry. VTIQ.
Yeah, Victor Tom Indigo Q. I don't know. My buddy tells me they're a disruptor in the something. So I bought it because it broke 15. I was like, I don't care what the story is. It looks, if it consolidated, it broke 15. I'm in. It's going to 20.
So this is just the market that it is. It's the ultimate buy the dip market right now. Every time we dip on anything, it feels like, except the stocks. So I'm going to put a little asterisk, except for the stocks that are at ground zero, like the airlines, the casinos. Now, although the casinos, they started to buy the dips on those too. So, but there's certain stocks that have been ignored, but for the most part, if you're a company that is somewhat sound and not directly impacted by this, buy the dip has been working better than it ever has before. Target last week, Intel. Just keep looking through the examples. And the overall S&P, I mean, overnight, same story. You get a dip. You think crude's getting killed. S&P's bound to probably go down, and it does go down for a little bit, but we'll find the silver lining somehow in this silver lining lit up market, and we'll buy it right back again. So this is the market that we're in. Okay, XSPA just blasted off here, Jason, right now.
Oh my God.
Moving?
Oh my God.
All right. So
Okay.
anyways,
You know what? I'm
like we
signing out,
said,
guys.
this
I'll
was
let you
just-
guys finish. I'll let you guys finish.
A lot of people apparently like what Jason has to say.
All right, that's a nice move there. All right, I'll check
Okay,
you guys.
you can't ever get trades like that, but I'm going to tell you something. That this is going to blow your mind too. But 9 o'clock contract J. So there's an actual headline that just broke saying exactly what Jason just said. So
Really?
yeah, I'm kind of in shock here right now. So Express Boss.
Oh my God. Oh my God, Jason.
With JFK International Airport for COVID screenings. So
How did you do that?
I didn't. I would have bought more shares yesterday, Spencer, if I really knew that.
Wow. Yeah, that just hit the tape. They signed a contract for COVID-19.
This is like the biggest coincidental thing I've ever seen in my life. I still think I said this on the Friday afternoon show, which I've never been on before, but I think I said if we come in and we get a bounce on Monday morning, I think the airlines are to be sold and the banks to be sold in that bounce. So I'm going to stick with that. We're getting a nice bounce on all those things. I think the highs are still in. Again, it's hard to call the top, so they take it up. But if I was going short, I would lean on Friday's highs in a lot of these things. Because there's people out here, and here comes a rant. There's people that believe that shorting is just flat out un-American. You don't short stocks. It is evil to short stocks. Kodak goes up to $60 because nobody can short it. That's why it happens. So the person who buys it at 60 is a victim because nobody can short the bloody thing. So because if people could short it, they would keep the price lower.
And I realized something. My biggest mistake as a short seller is shorting a good product on valuation. I think the valuation on Peloton is stupid, ridiculous, nonsensical. I think the valuation on Shopify is stupid, ridiculous, nonsensical. They're both very good products. How about Tesla? Stupid, ridiculous, nonsensical. Why short a good? Historically, if you want to make money in this market, the past 10 years, if you find a product and you like the product, you buy the stock. You do not worry about the price of the stock.
I still think, 3 to 5% is the right number. And the reason I think about that number is I view it as a diversifying asset like gold, right? I think you should have 3 to 5% in something like gold, physical asset. I think you should have 3 to 5% in Bitcoin as a digital asset. The best thing about Bitcoin is it is the only asset, including gold, bonds, everything, that is truly uncorrelated to traditional assets. It's 0.15 correlated to the S&P. So when you add it to your portfolio, you get lower risk in the overall portfolio and better return.
So there's another thing, though, that I didn't count on that I guess I got wrong. And this applies to all direct listing stocks. The trade-off for a regular way IPO versus a direct listing. So Snowflake is a regular way IPO. Slack, Spotify, there are a handful of others, high profile companies were direct listings. In an IPO, the insiders have to hold on to their stock. They have a lockup period, and the lockup period expires. Sometimes they stagger it. There are 2 separate expirations, but employees and executives, they can't just get liquid on day one. They have to hold. And that sometimes can help keep the float small and provide support for the share price in the early going. Company usually has 2 quarters, 3 quarters to report results before there are any large blocks for sale from the insiders. Okay. In a direct listing, they basically say, okay, here's the trade-off. We're just going to list this right here at this price, and everyone's liquid day one. So there was no underwriter, right? So the Wall Street banks didn't do any work for them. So they say, well, we could sell whenever we want. We're not obligated. We don't have to make any promises to anyone because they're not going public to raise money. They've already raised the money. They're specifically going public to provide liquidity for people who have already invested, the venture capitalists. Okay. So with Slack, 2 problems with going public that way. The first is they don't have any champions. If Morgan Stanley and JP Morgan and Goldman Sachs and Bank of America didn't serve as your underwriter and sell this to all their clients, they're not incentivized to come out 30 days after the IPO and give you a strong buy. So Slack never really got that institutional support from the street because they didn't pay anybody enough money. That's the problem. The second problem, though, is people were liquid to sell immediately. So I think that definitely had an impact on the lack of momentum. So I didn't count on those things. It escaped me how important that they might have been.